Hi guys, this is Kel, and this is my 898 video. Two more to go to hit the 900 series. Now, this week I've been very active, very productive because I got a lot of things to share with you. Now, there'll be a big dynamic change for TWB very, very soon. And of course, after that itself, I really wish that all my hard work that I've been giving to you guys, you will use it and profit from the market. Now, one thing to note is that the VIX spread and the put option cost is getting at the trading at a very extreme level. The spreads is opening up, and the put option is at very low cost right now. And the thing is this, based on the seasonal pattern and based on the common pattern, there could be a chance that we could see a very big movement in coming February. So that's the reason why I want to pay great detail into this video. All right, as you can see behind me, the picture behind me itself, you can see that all the different states in America, most of them, people are not able to pay for their houses, right? They can't really afford to pay for a medium price home. And if this is going to continue with high interest rate itself, delinquency going to shoot through the roof. All right, so without further ado, let's go into detail. Disclaimer by usual, and thank you, Ames, for the kind sponsorship. Now, first of all, let's look into January. Now, this is the seasonal pattern since 1950 to today. If the January month is a positive month, usually it will be a fantastic time for the S&P. It will go all the way up, and by the end of the year, it will end about 16.8%. Now, that is fantastic. Now, if January started off weak, then usually it will rebound around March period, ding down a little bit, then a bit of a rally to the end, but usually ends down about 1.8% over the last 72 years, 73 years. So the thing is this, we have a very strong January, obviously. So therefore, there's a very high possibility that we can end the year even higher by Christmas period. But the question is this, with the current market right now and this particular way of movement, it does seem to tell us that we need to be very careful because things may get on the wrong side. And if you buy at the wrong side of the market before the main rally comes in, then you'll be caught and you're going to waste a lot of time and opportunity cost, right? So to me, it's why don't you just wait for a while, let the price pull back and then buy cheap and then let the January effect comes in. What do you think? Let me know in the comment box there. Now, one thing to note is that now the stocks are doing very well because you can see now 84% of the S&P 500 stocks are trading above the 100-day moving average. Now, this is a very good sign. It's very bullish. And the thing is this, it happened before, back in year 2023. That was way before the market came off. And it happened again before in February 2023, where same thing happened again. So if you ask me, right, would there be a chance of a repeat cycle? Well, it is possible, especially now we're at record high level. But the thing is this, if you look into the seasonal pattern for February, this is very interesting. This is whereby from 2003 to all the way to 2023, the last 20 years, you can see that the first few days of the February period, the market will go sideways or be a downside. Then by the 10th or 12th of February, there'll be a rally. And then interestingly, by the about 15th to 20th of February, there'll be some selling, right? So to me itself, I don't think I want to chase it right now. I think you can wait for a while, let the price subside, and then after that, look for good levels to buy in again. Because now, right, you can see from the fourth quarter 2023 EPS, earnings per share revision, the main driver S&P is the Magnificent Seven. All right, they are the Amazon.com, Apple, Google, all right, Meta, Microsoft, Nvidia, and Tesla. Now, one thing to note that among all the 7 of them, Tesla is coming off fast, all right? So would that be a spillover effect? I feel that will be, and I think the next counter might be affected itself, right, will be Amazon or this Google, in my opinion. Of course, the last to go will be Nvidia, which is now the blue-eyed boy of the S&P. But again, the people who are calling for the upside, like basically 7, 8, 900 itself, is kind of observed, in my opinion. So what if the Magnificent Seven do take some profit taking? Then of course the S&P may really sell quite a fair bit. I still believe that there will be a 5% pullback on the S&P very soon. I think this will happen by today, probably from 31st of January today. Okay, until it may happen until probably 10th of February. Let's see, I'm right on this, the 5% drop on the S&P 500. Now, of course, my reason are many and plenty. One of the things is that now you can see the spread between October and September, VIX is exceeding what happened in 2020 and 2016, right? So what's happening right now is that when the spread gets so wide, that means that somehow someone expecting bigger movement to come. And of course, they look at the PCE, the core PCE data, it has went below the 2% target, right? So the question is this, is that means that the inflation is coming down? Well, by this report, it seems that inflation is coming down fast and very fast. Hence, therefore, right, it should be good for the economy. Not really, because do you feel that? I don't feel that. So somehow someone is probably massaging the numbers to let us think that it's actually a good time for inflation to be around, but instead it's not right. We haven't seen the real problem yet. So you look at the home price versus the affordability itself, you can see that the Case-Shiller National Home Price Index is shooting to 313.8, the highest level since the last 30 years, while the affordability is now at a low end. Now, this is not a good sign, because when people cannot afford the house, then what will happen then? So that's the reason why I think the Federal Reserve needs to watch out for the credit card costs and loans and stuff like that. So that the credit card loans balances right now from 2019 to date, definitely the money involved is much greater. And of course, the stock market will be high. We can expect that. But when everybody's on one side itself, you need to be very, very careful. Especially now, the credit card loans, the 30-day delinquency rate has basically rebounded from 2021 to all the way to current level, even higher than that. So again, this is telling you that the people are going crazy, buying shares, buying stuff which it may not need. And then when the things happen, that is where suddenly things will turn around. And that's why Steve Henrich, who is a regular on CNBC for technical analysis, he says that there's another odd under the hood behavior chart. While main indices like Dow, Nasdaq, S&P keeps running to record highs the weekly, Stochastic has been dropping to near maximum oversold level, right, which is here. Okay, let me just show it to you right now. So the market was at a high back then, but the thing is that the price was coming down. It doesn't make sense. So where are we right now? We're at all the high level now, but the price doesn't make sense, right? So because of that, right, he says that the last time this thing happened was 2020 February period. And that one, we know that was actually the start of the coronavirus. So is that something that they know we don't know? Traders, just be very, very careful, all right? So you can see right now, the 3 months S&P puts are really at very cheap price right now. And because of that, right, it's going to be crazy, because if you ask me, it's like $1 bet itself can get back $5, $10 is something that you can consider to the hedge in the market at this level right now. But of course, the market can drag for many weeks and many months, and you can get all the swap costs to burn you out. So please trade with care and trade according to the rules if you have the what to do on your site. Yeah. All right. So with that, that's all. Take care. Thank you very much. Have a great day. Sign off here. I'll see you for the 899 video. Bye-bye.